This is London with MarketHedge. We have a bit of a pattern development and dynamic on Bitcoin. I want to talk about the descending triangle. I want to talk about a bear flag. And let's talk about some upside and downside targets. This is London, former hedge fund owner, private, non-SEC, not financial advice. And we'll be trading and looking at the results here on MarketHedge. Pro in terms of the new facility that we're bringing to the market this year, 2025. Now, in terms of the drop, yesterday we talked about it. We had the divergence on the 4-hourly, right? And we really had a divergence in terms of this drop off, and that's the 4-hourly RSI, but the drop off on the MACD, along with this just trajectory to the upside, which would not quit. So we've fallen into a familiar scope on the 4-hourly, being the Bollinger Band. You guys know it's a very consistent wraparound. Our envelopment for the price in terms of top side, standard deviation resistance, bottom side, standard deviation support, and that mid-level critical 20 moving average, which we are so familiar with. You guys are very aware of that. As that 20 starts to bend over to the downside, MACD at the same time is trying to recover and go green, which it hasn't been in some time, at least with any kind of a positive, real positive tilt to it. So what we're going to be looking at after this trajectory to the downside on the RSI is the following. Let's pay attention. We've got the descending triangle, which we were in yesterday, and it turned out being a really nice short. I played around on the side a little bit, didn't want to go in heavy. I want some higher levels of resistance. Even this higher level of resistance would be fantastic. Give me a short up and over this line. Here we go. Yeah, give me a nice high short. Get me up in the 130s. I may have an ulterior motive of wanting Bitcoin to get up in $130,000, $135,000 in terms of the range, so I can short it. But at the same time, it is indicated as more extreme value that I'd like to short from, and getting there would be more than half the fun. Now, in terms of the descending triangle, I want to pay attention to a few different dynamics along with this bear flag. Let's look at this and pay some attention. Hit 1 and hit 2 on support. Nice solid hits. We're seeing a good recovery. That's throwback, pull back to that preceding level of support and to that pattern that's in play. Now, that's a good thing to see. It's treating the traders fairly, right? If you were on, and pay attention, if you were on support trying to hold in this zone and picked up with the other traders here to the left, what has it allowed you to do? Well, it did break even for you if you decided to play bull along at a support level, right? That's one of the ways to gauge the asset that you're trading. Is it being fair to the traders, right? The traders who entered in here trying to play along with support preceding levels of interest here, yeah, they've been given a break even, a little bit of a reprieve right there in the market after this push down. So as we look at the current dynamic in play, we've got a few different targets. One being a target to the downside. We'll go over that briefly after we go over the reason, or let's say the technical formation that could get us there. Looking at the preceding flag pull. Yeah, and stacking that to the downside. This could be it's not going to be easy. I'm going to say that. The bulls have been comfortably in control, but that could be a move down to 118.5. And the way that this is required to be defined is a move to the downside with a channel formation that cuts against that trend, and the trend on this specific move, preceding trend, would be to that downside. So we need that move to the downside, right? Then we need cutting against the trend, the specific channel formation to the upside, and then we would expect, ideally for the bears, would be a completion to that downside. Just do me a favor and never ignore a bear flag on Bitcoin, on the micro or otherwise. Just pay enough attention to them to where if they want to really perform, that you're going to give it the credence in terms of at least hedging back on your risk exposure. Never a bad idea. Looking at what got us up and out this afternoon, at least in the Asia session, would be following micro bull flags. So we're just dancing across the top here, preceding resistance in terms of what might fold or not. What did we see precedingly that's on this line? The bulls need to charge up and over, or the bears need to maintain that 20 moving average. So that's exactly where we're at. That's going to be the litmus test. Bullish over, bearish under. That's the name of the game. In terms of some additional feature work, take a look and just remind yourself on the daily right now. And again, in terms of higher shorts, I just love classically shorting over the top of a rising wedge. It's the daily chart. So for me, in terms of a heavy-handed play here, and sure, I hit around yesterday with a nice short and got some good action on it yesterday after the video. But in terms of the top line resistance and bottom line support, we're just in a nice constriction right now. So this would be a great area if you are a bear to look at if we can get there, right? That's the big if the bulls can push it up there. And if I can coax it up to over 130 or 135, that'd be great for all the bulls concerned. We agree, absolutely. So it'd be a nice target and pinpoint to get up and over here and even to retrace back down to that apex if and to the extent the bulls can get up and manage that level. So in terms of the downside target, let's just revisit that. I pointed it out yesterday. You guys already know it, but just to refresh and spend a few minutes with you on the technical so that you can just remind yourselves of what we discussed. It's going to be, and it's a nice shot on that daily. We covered it on the lines yesterday, which we can scope in pretty quickly here. Lines are going to be a little more conservative. The candles are going to be a little bit more aggressive. So just call it 117 to 117.5, essentially, guys, in terms of that nice preceding level of resistance. Hit 1, hit 2. That's a nice flat line, which is a great target, for the bulls to at least stack some orders at that level and the bears to try and push us down to that preceding resistance. Everybody agrees. Yeah, it's a nice target. And I say a nice flat line because it's a level of interest that's hit down 1, 2, or hit up 1, 2, and 3 times. So it's just really clearly identifiable as something that the market appreciates. We appreciate it as traders, having clear lines of distinction in terms of areas to target to the upside or to the downside. So lastly, let's just talk very briefly in terms of what we're looking at. A nice upside target currently will be, I'm looking at the 30-minute time frame, and a dotted line here is going to be the expression in terms of this lead in is what this is going to be. A lead in on expanding volatility. You'll note that we call these bell pattern formations. You got it right. Anytime that we have descending, pay attention, descending and expanding between the bulls on support, bears on resistance, a little bit past that, bulls on support, but then back to the bears on resistance. Anytime we're expanding like this, we like the equation. It is volatility defined. Literally, there is more of a hit and more space between the bulls on support and the bears on resistance at every level. So we like the volatility. We need the volatility. In terms of those upside targets, they can be very reliable. On this specific topside resistance, though, do pay attention to that 4-hourly 20 moving average that we paid attention to here and that we leveled and scoped into about that 123,251. So if we're looking at that 123,251, it's going to be close, In terms of that, just pay attention to the 20 moving average, right, on that 4-hourly as something that could compromise this. If you're flipping more bullish and you want to say, okay, well, this is a nice target, but what would another nicer target be to the upside? Let's go ahead and carry up a specific parallel channel. We have hit 1, 2, 3, and 4 would be a nice hit. That's on the map with the bulls in terms of something that would be up and over that 20 moving average, potentially, depending upon how long it would take to get up to this parallel carry up. It's just a nice, guys, straight off of Wall Street, hit 1, 2, 3, and a dynamic of that parallel carry up to the 4 dynamic. So the litmus test is going to be that 20 moving average. We all agree on the 4-hourly. Bulls have got to sail up and over. Bears are going to try and reforce under. It's a bullish over, bearish under with that clearly underlying 118 target. Guys, let's see who's going to be in the mix, which direction you're going to trade. It all unfolds on lower time frames. Want to shout out to all our VIP and everybody in the back with MarketHedge.pro. This is London, former hedge fund owner, private non-SEC, not financial advice. If you want to join guys with us today, go ahead and do so. Hit me up at the DM or otherwise with an email. Hope you guys are doing great. Let's go New York. Looking forward to see what the market's going to bring us today with Bitcoin. Take care, guys. Talk to you soon. Bye-bye.